Welcome back. After soaring 96% in 2007, the Shanghai Stock Exchange looks poised to continue its record run in 2008. But producer Stephen Lee talks to some analysts who don't expect the gains to be as strong this year.
If you look at the fundamentals in China, I think the Chinese economic growth will be fairly strong. Negative real interest rates will continue. Excessive liquidity is going to continue. So overall, I think the Chinese A-share prices will see upwards momentum, but with quite a bit of volatility.
Now in 2008, the environment will be quite different because the global economy is weakening. The US might even go into recession, which will clearly impact the Chinese economy and investor sentiment. So 2008 will be a more challenging year. However, on the positive side, the Chinese economy will continue to grow at over 10% in 2008. Corporate earnings growth remains very strong. So going forward, I think the stock market will perform reasonably well, but I don't think the A-share market will replicate the very, very outstanding performance in 2006 and 2007.
Both analysts say growth in the two mainland bourses will be limited, with the central government further tightening monetary policies.
We saw the recent increase in the reserve requirement ratio. We may see further interest rate hikes. All these will basically impact investor sentiment in the A-share market. So therefore, a correction may be on the cards sometime in the first half of 2008, but I don't expect a massive correction.
Ulrich expects the Shanghai Composite Index to rise around 15 to 20% this year. The long-awaited through train that will allow mainlanders to invest directly into the Hong Kong stock market is also expected to be launched sometime this year.
Probably will be watered down substantially, but the overall size and entry barrier, in my opinion, probably will be adjusted quite substantially.
When the plan was announced in August, speculation was that up to $100 billion could be invested in Hong Kong stocks.
I think the government will be very cautious when they introduce a through train program. They probably will limit the program to a few select cities, to a few select brokers. Now, a few things need to be put in place before the through train program is introduced. Number one is investor education. Number two is a mechanism for risk management.
The central government is also expected to continue introducing austerity measures to curb the overheated property sector. But Dong Tao still thinks prices will continue their upward movement.
Negative real interest rate, excess liquidity, the number of new flats in the pipeline actually have declined. The anti-corruption campaign actually slowed down the new land release in the past 2 years. The austerity program virtually stopped all the bank lending to the property developers. So in 2006, the residential property construction volumes dropped by 40%.
China's trade surplus with other countries is projected to come in at about $250 billion in 2007. While global economic growth is expected to slow down this year, the impact on China could be limited.
This time it's not just the US slowing down, but also in Europe and in Japan. So I suspect the Chinese exports probably will see a quite substantial deceleration. In 2007, we project 27% of export growth. In 2008, we look for 16%. But it will have much less impact to China's headline GDP growth because China has a lot of domestic demand.
China's trading partners have been pressing the country to hasten the pace of yuan appreciation. The currency has strengthened to an all-time high at below 7.3 to the US dollar.
We expect continued gradual appreciation of the Chinese yuan. In the last 2.5 years, since July of 2005, the Chinese yuan appreciated about 10% against the US dollar. But over this period of time, the yuan actually depreciated against many other currencies, including the euro, including many Asian currencies. So in 2008, our outlook is for gradual appreciation of the RMB rather than a one-off large revaluation.
Interest rate hike probably is not enough to really control the liquidity. And also you got to do something to control the liquidity from the source. Why China has such a massive liquidity? I look for the renminbi to appreciate 10% against the US dollar in 2008.
The government has already quickened the pace of revaluation, the yuan strengthening by more than 2% in the last 2 months. Last month, we asked two market